Good morning and welcome to the Orlando Real Estate Buzz. Glad to have you here. And Joe was here, but internet in his building went out literally 10 seconds before we went live. That's pretty funny. We've got a lot to go over today in the show. There is so many things going on right now in the market, and we're going to go through them. One of the big ones is the bond market has just taken a good dive in the past couple days, and we've seen a big spike in the interest rates. Donald Trump has come out and said he wants to privatize Freddie and Fannie, which that could be a big change. Um, Sentiment from the builders, from uh, consumers, has really dived off the platform. So there's just a lot of stuff going on, and everything's moving quickly these days. So we're going to go in, we're going to take a look at it. So thank you again, and welcome to the Orlando Real Estate Buzz. Hello again, and welcome to the Orlando Real Estate Buzz. Hopefully, Joe will be back here in a moment or two, and will be able to join us. We want to go over a number of things today, but the biggest one being is what has happened over the past couple days, and that's with the bond market. Um, it started really kind of in Japan and has followed through to the U.S. market. The Japanese market, if we look into this, their bond market has just disintegrated over the past couple weeks. What has happened is their yields, which were sitting at roughly about 2.5, spiked over 100 basis points in literally a day and a half. So their borrowing cost is just going skyrocketing right now. And why is that important? Because we have what's been going on. It's called the Japanese yen trade. And basically what that was is, again, the um the the people were going to Japan, borrowing money because you get money still close to 0%, coming back and buying assets in the United States. And with that spread of what they were getting for yields, say in the US market, say 4%, with the US treasuries, borrowing money at the Japanese level at close to zero, there was a nice spread and people were making very good money. Well, with the Japanese bond market going basically kaputty, um, that spread has decreased and that yen trade is dissolving right now. Problem with that is you're going to have a lot of people with a lot of margin calls that are going to be coming due. So that's a little bit scary. Then what happened earlier last Friday, and this kind of out of the blue, but kind of late as well, is Moody's cut the US government credit rating from AAA down to AA plus. Um, should have been done a while ago. I mean, we're the reason why they said that they were doing this is straight up honest as can be. And here it is. Successive US administrations and Congress have failed to agree on measures to reverse the trend of large annual fiscal deficits and growing interest costs. We do not believe the material multi-year reductions in mandatory spending and deficits will result from current fiscal proposals under consideration. Basically, what's it mean? Whether you're a Democrat, whether you're a Republican, you have no fiscal responsibility whatsoever. You can't make the hard decisions. And quite honestly, I'm getting a little sick of it. I happen to be more conservative in my spending, my political views, and I'm getting a little tired of the Republicans promising a whole lot of bullshit. Plain and simple. That's all it is. It's just a whole lot of plain bullshit because they are not actually cutting spending. Yeah, they had Doge. Yeah, they found a number of places. That's great. But you can't do that and then increase spending. I'm sorry, but I love the military. I think, we need to protect ourselves, but we don't need to go from a 900 billion to $1 trillion in spending in the military. It's unsustainable. And then with the big, beautiful bill of Donald Trump's, I don't see it as being so big and so beautiful. It's big in as far as not cutting any spending, but beautiful, no. Because what is it going to end up doing? Here it is. Deficit spendings. This is from Congressman Davidson, who was one of the few Republicans who actually stood up and said no to the bill. And I commend him on that because we have to. And you're seeing, yeah, maybe we'll have a little less spending here in 2025, but immediately deficits for the next 5 years. And of course, we finally start to bring them down in 2030. Why is it we never bring them down now? We always push them off to the next Congress, always push them off, you know, down the road. Kick that can down the road. We can't kick it anymore. You can't. It's got to stop. And someone the president, Congress, somebody. I mean, I know it's hard because you get all these people screaming, "Oh, you can't cut mine. You can cut theirs, but don't cut mine. You can cut theirs, don't cut mine." Enough. Enough. Just stand up and say no. It's gonna hurt. I mean, we are basically going to be taking a heroin addict, which is the US consumer and the US government, and we need to make them go cold turkey. That's it. Throw them in a room, let them sweat it out. That's what needs to be done because otherwise we're headed in a continued downhill spiral. And what has that done to our markets? Well, here it is. Here's our 10-year treasury. And they did an auction, believe it yesterday, 20-year auction, and it went bad. It went horrible. And immediately what happened? Here it is. We took a huge spike in the 10-year treasury. Why is that? No confidence in our government. No confidence in our government to cut spending. Cut the freaking spending. Stop it. In this big, beautiful bill, what did they do? They increased the debt ceiling $4 trillion. So again, pushing it down the road. I personally happen to really like Secretary Bissett, Secretary of Treasury. I think he's an incredibly intelligent man. And I've watched several interviews with him. And I understand what he's trying to portray in that we're going to create so much growth that our percentage, which under Yellen was roughly about 6.7%, I believe GDP to deficit spending, somewhere in that it's sustainable if we can get it back down to under 3%. Why can't we have zero deficit spending? At some point, it just becomes impossible. And the only thing you can end up doing is inflating the currency. That's it. I mean, what a lot of people don't know is, okay, yeah, the government has said that, there's no more quantitative easing. Well, what is quantitative easing? Quantitative easing simply is the Fed will buy bonds to push liquidity back into the market. Well, in the 20-year treasury auction yesterday, what did the Fed do? The Fed bought $2 billion worth of 20-year treasuries. That's quantitative easing. They haven't stopped quantitative easing. They're still doing it. They do that so that they can push liquidity back into the system. What did they do earlier in the month on the 30-year treasury auction? They bought $8 billion of treasuries. Again, putting liquidity back into the system. So this quantitative tightening, bullshit. Quite honest, straight up bullshit. They are still doing quantitative easing, making sure that there is, quote, liquidity in the system. Meanwhile, our money supply is at one of the highest levels it's been in years. And again, what is it doing to the consumer? Here it is. Here's our 10-year treasury. And as we often mention, the 10-year treasury is a great landmark for where the mortgage rates are going to be. Right now, mortgage rates are running about 3% higher than the 10-year treasury. That spread. So our 10-year treasury right now is sitting at 4.58. What does that mean? It means our interest rates are going to be jumping to around 7.5%. The market finally felt like people understood that, okay, these rates aren't going to come down. We're not even going to get down to the 6% again, but I'll live with that 6.5, to 6.75, somewhere in that ballpark. It really felt like the market was getting back to being comfortable with that. And you were starting to see more sales, more activity on our listings when we go in and get the weekly reports of how many hits are on Zillow, how many hits are realtor.com, on our own web pages. All those volumes over the past probably 60 days had all uptick. Past week, since we've seen a spike, I've seen a drop off of nearly 40% on the listings. So people, again, the buyers are going to pull back again, and the sellers are going to have to do one of two things. They're going to have to increase their incentives, or they're going to have to drop their prices. It's just not sustainable in that format. Because what are we seeing overall in the market right now? Here it is. U.S. consumer sentiment drops in May. People are nervous. People are scared. Even though the job numbers came out and they were fairly steady this week, there's a lot of anxiety that's being built up in the markets right now. What about the builders? The builders are in the same situation. Their confidence has dropped off the cliff. They've just jumped. And you're seeing what they're having to do to get homes to sell. The one reason why the builders are maintaining a little bit is their incentives again are out the window. They're actually cutting prices, still providing interest rate incentives that are phenomenal, plus closing cost incentives. So they're one of the few who are still making it attractive for buyers to look and say, okay, if I can lock in and they're willing to buy my interest rate down to 5%, 4.5%, even 4% for the 30-year term, okay, I can actually afford this house. I can afford that $450,000. I can afford that $500,000. Resale cannot do that. Sellers just don't have that ability to buy those down in that format. They can provide closing costs and other incentives, and that's what they're doing right now. What you're seeing right here, and I really believe this is higher than what Redfin is reporting. They're saying 44% of home sellers are giving concessions to buyers right now. I think that's higher. I know in the last 2 listings that I've done that we have come closing up, both of those we provided concessions for the buyers. Why? Because again, the volume of buyers has dwindled. There's less people out there looking for homes, less people comfortable making that type of commitment, long-term commitment. So what have you had to do? You've had to cut some way. And a lot of the ways is you're providing the concessions to buyers to make the deal hold together, to make the deal, go through and complete the transaction. So there's a lot of anxiety, just a lot of anxiety on the seller's end, on the buyer's end. Um, the mortgage end of it, there's anxiety because we're seeing interest rates go up. So the market is really kind of in a lot of turmoil. Who does that provide the biggest advantage for? Really for the buyers. Um, if you're a buyer and you're looking to buy, you still have opportunities. You can look at the new builds. If you've got a resale that you're looking at, you've got the ability because you know that there's less buyers out there. That eighth of a point, believe it or not, that eighth of a point increase in an interest rate can push someone out of the market. It can truly push someone out of the market. So when you're looking and you're negotiating, it's not always price. I mean, price is one thing, yes. But if you can also work in with that seller a concession, because Fannie Mae, if putting 5% down, 10% down, uh, the seller can contribute in conventional up to 3% of the purchase price towards seller concession. Fannie Mae is higher, or excuse me, FHA is higher. That can actually go up to 6%. And if you're putting 20% down, conventional, you actually go to 6% as well. So there's knowing this is that's how you negotiate it. Is you got to know what you can be afforded. And biggest thing I'm teaching my buyers is don't be afraid to walk away from that deal. Do not be afraid to walk away from that deal because there's a good chance we're the only ones, a very good chance right now that we're the only ones looking at that home. The homes that are going quickly are the ones that are priced right. You're seeing a lot of sellers offer concessions right out the gate. $5,000 closing cost credit. 7,000. I saw one for $7,000, and I saw one for $10,000 right off the bat. Not waiting 30 days to offer it. They were offering it right off the bat to try and entice the buyers in. So buyers, if you look at it, it may be a very good time to buy. And I know I'm not always a big fan of refinancing just to refinance, but with the current spread being at roughly about 3% on mortgage rates, there's a good opportunity that rates could come down without the 10-year moving in any direction. And if that happens, that's when you can take advantage and you can actually do the refinance, cut your rate up a full percentage. I think that opportunity is going to be there. Um, Maybe by the end of 2025, maybe by 2026. Uh, I think there's a good opportunity that we can come somewhere in that range. So that's everything in a nutshell that's going on. It's some days it feels a little overwhelming, and and it's a little nerve wracking, quite honestly. So just keep an eye on it. Questions, always feel free to reach out to us because we will answer your questions and try and guide you the best way that we can. Now just coming into our local numbers, wanted to go through this real quick. Orlando really just moving steady overall, continuing to move in a south, not real high, not real low, but just moving along in a steady format. We saw homes continue to sell. We got about 460, which this time of year I would hope to see that more up towards the 600, like we did see at the end of April, the last week of April, where we had a really good week for everybody. I think there were over nearly 700 sales of 600 and a good change. Our inventory is continuing to increase. People who have been waiting. It's that time of year where a lot of people are going to put their houses on the market. What we're seeing also is sellers are leaving their homes on the market longer. They know it's going to take longer to sell the houses, so they're leaving the houses on the market a little bit longer. Condos, condos are just flat as can be. Hopefully, the new bill that the legislature just put on DeSantis' desk will help stabilize the condo market a little bit. Basically, what it's doing, is they had to meet certain requirements for the structural guidelines by the end of this year. It's extending it for a year. It also is allowing them finally to not just rely on reserves, but also be allowed to borrow money to do any repairs that are necessary. That could take a lot of burden off the HOAs and the reserves that they need, because we've seen, probably on average about a 300% increase in HOA fees for condos. And that's why you're not seeing them move. It just doesn't make a lot of sense. Look here again, currently active listings for over 9,000. I don't remember the last time I actually have to go back and look that we've had that many homes on the market. That means buyers have a lot of opportunities to find something they really like. And if it's not quite right, negotiate. Negotiate. Get what you want. Months of inventory, we're sitting about 4.5 months overall. I still feel that that's a buyer's market with the way technology is, the way things move much quicker than in the past. And you can see here, original list to sales price, 94.5%. Sellers are negotiating. They're coming off their original list price, and our days on market are holding steady, 59 days on market. Again, you see our weekly sales, and here you go back into February, and you see we're just over, 400, about 450, and we're really not moving up or down for there. This was the end of the month where we had a little spike. And then here's our inventory. I mean, it is just a steady uphill climb. We are actually up nearly 24% in our inventory just from January. Just from January. So you're probably driving around, you're probably seeing a ton of for sale signs. So if you're thinking about it, reach out to Joe, reach out to another, another lender, go through numbers and come up with a strategy. Know what you can do, know what you can't do, and don't go in blind when you start looking at houses. Stay within your budget and negotiate. You never fall in love with a house. Never fall in love with a house, because it is a negotiation. It's a transaction. Okay. Just try and take the emotion out of it. I know it's hard for a lot of people, but sometimes that's the best thing you can ever do when you're negotiating. Then here's our condo market. Look at this. Active listings in the condos. 4,600 condos currently available. That is a huge number. We have about half as many. There's about 50%, half as many condos available as there are houses. That ratio is unreal. Usually you see about 20% number of condos to the number of houses available. And 10 months, total buyer's market. 10 months of inventory is a complete buyer's market. And you can see it here. I mean, they are down to 93.43% of original list price. And the average days on market is 80 days. So you're going to be sitting there for a while if you're selling a condo. Be prepared for it. If you want to sell it quicker, make sure it's clean, make sure it's priced right, and be willing to offer up a little bit of concessions to a buyer. Best thing you can do. So that's our market for the week. It's a lot to take in. That's why we're here. We come to you every week, and hopefully Joe's internet will be picked up by next week. Thank you again for joining us for the Orlando Real Estate Buzz. Please like, subscribe, and join us every week. We're going to be coming to you live now on Thursdays at 11 o'clock. Take care.